Hello accounting students, and here is a quick little video about Chapter 4, Exercise 4.4, Compound Journal Entries. I've had a couple of questions on this, and my previous video did not have any sound, so we'll go again with it. That's fine. Thanks for asking. So looking at the first transaction for November 5th, the transaction is we performed services for Job Search Inc. for $40,000. That would be fees income, right? We received $19,000 in cash, and the client promised to pay the balance in 60 days. So the client will be owing us $21,000. That will be on accounts receivable. So let's set this up. We have to put the debits first and then the credit second. We know the credit's going to be fees income, so we'll wait on that one. So first, we know that we did receive cash, and that was for $19,000. And the balance will be paid later in 60 days, so that will be accounts receivable. And let's see, it was $40,000 minus $19,000 is $21,000. All right, and then our credit would be fees income. Oops, I need to indent that, huh? $40,000. And I haven't set this spreadsheet up for appropriate formatting quite yet, but we'll get that done. And then make sure that you put your notation here. I won't fill it out for you, but make sure you have all the details here because you want to be able to look back at the journal and figure out what happened with that initial transaction in case you have trouble later on. So the notations are very important. All right, and let's move on to the second one. Whoops, I forgot to put the date on the first one. November 5th. Okay, the next one will be November 18th. Reading the transaction in the text, we purchased a graphing calculator for $425 and some supplies for $575 from Office Supply. We issued a check for check number 1008 for the total. So we are sure that we're paying out cash. That's our credit. We are purchasing a graphing calculator. That would be an office equipment. And we purchase supplies. That would be supplies. Okay, both of those would be debits. We are increasing them. So let's start with the office equipment. That would be for the calculator. And that was $425. And the supplies for $575. This is the same transaction with one check, but it has to go into two different accounts because office equipment and supplies are so different. We use up supplies. We use office equipment for several years. Remember that. Okay, and then we did pay cash with a check, and that should be $1,000, right? Okay, and then we'll also want to make sure you make a notation here. And of course you could be doing this on the papers. So if you like Excel, don't be afraid to try Excel for some of your homework. That would be great. Okay, the last compound transaction is November 23rd. And it says we received invoice 1602 for $2,100 from Automotive Technicians Repair for repairs to the firm's automobile. We issued a check, $1,009 for half of the amount and arranged to pay the other half in 30 days. Okay, so we know that the credit's going to be cash and accounts payable because we weren't able to pay the whole thing. But we did have our repairs made, and when you have an expense, this would be an automobile expense, that is our debit. So we don't have all the details, we're just guessing. So we have an account called automobile expense, and the entire expense was $2,100, and we paid for half of that, and we're going to pay the other half in 30 days. Okay. Then we want a very clear notation so it's clear what we've done. So we need to write down the check number and the invoice number and the notation that we're paying the other half in 30 days in case we need to come back and look at this later if we have a question, say when we're paying the bill, just double checking it. Okay, I hope that helps you with your compound journal entries on page 108 in Chapter 4, Exercise 4.4. Please let me know if you have more questions. You know I love to make movies.